Hi traders and welcome to the Friday Market Watch on the 24th of November. So I've seen a pretty subdued week this week with a lot of consolidation at the key areas that were broken last week. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD, and we can see we continued on from the strength of last week. We broke through the very important zone here early in the week and obviously continued on. The last couple of days have been a little bit of a pullback, but no real surprises there. Like that 65-cent mark was a very key zone for it, so no real surprise to see it struggle a little bit above at that level there. There is a bit of resistance at this point. If you pop a horizontal line there, you'll see that it's pretty reasonable support right through this level here, and it was resistance at that point there as well. And we're talking about that sort of 65-60 mark. So not a real surprise to see it pull back a little bit there, but it looks strong, and really we've got a 20-50 moving average cross now. So with that being the case, I would think that with the momentum sort of starting to kick in, the series of higher highs and higher lows are probably going to continue. If we get a break above that 65, probably the 65.80 to 65.90 is the level that really needs to be broken. If we do get a close above there, the next real support or resistance for this case is 66.20. So not a great deal of pips away, but enough to sort of get your scalps in. There is a reasonable amount of resistance at that point. You've got to be very mindful that all this level of support here was support for a very, very long time. You can see how many touches there were there. So when we do eventually get this little breakdown of this area, the next point, a 66.20, is going to give it some grief. I would be very surprised if it blasted through there without any resistance whatsoever. Of course, if it rolls over here, I'd be looking for a pullback back down to around that sort of 64.90 to 65 area. Probably trade within that zone as a scalping opportunity. But yeah, a break above this level here, 66.20 is the next on the radar, and momentum looks strong. We've got higher highs, higher lows, and a 20-50 moving average cross. So really just let it sort of play out. But you can see the last few days have just been consolidating around this area. Over to the US dollar CAD. And look, a little bit of weakness. You can see we've got a couple of spikes in a few of these candles. The previous day, there was a very, very big spike. So 37.67 all the way down to a 136.90. So you're talking about a 70 pip spike on that candle, which, yeah, it's pretty ominous actually. But really what it is doing is forcing its way down. Like you can see, we've got the series of lower highs and lower lows happening now, but the base is still holding up. You can see here, we've got very, very strong resistance at 136.80. You can see right through there was very, very big resistance here and here as well. So we would probably expect that support will hold up. The 50 moving average there is also to bolster it. So yeah, in reality, though, we are still trying to break down lower. This level has to hold in order for this to actually sustain any strength. If we get a close above the 20 moving average on a daily, so above that 137.50, we'd look at it with a slightly different lens, and then we'd be looking at potential longs back up to that 138 area and then onwards to the 138.50. But realistically, this is a very, very important zone for a very strong support here because it is a role reversal zone, and the 50 moving average, if it breaks down from this point onwards, yeah, the 136.30 is the next target. You can see we've got resistance here everywhere. A lot of price action around this area here. So only scalping really, you wouldn't want to be looking for long-term changes of trend at this point, because it still seems like it's got a lot of work to do both on the upside and the downside for that to happen. So keep your trades relatively short would be my opinion, and basically inside the two zones that we've just talked about. US dollar yen did what it needed to do for us. It pulled back. I know we were talking here on last Friday, and it was trying to break through the 20 moving average, and it certainly did so now. You can see that we got that break, as you can see on the Monday. It has actually changed around now, though. You can see there's a pretty reasonable morning star pattern here now. You can see that the a daily morning star is generally a pretty important pattern, and it's rare that you get one so clean. So you can see the both two big full-bodied candles and the big hammer candle separating the two. And it's at a place where you would expect it to that 148.50 area is a very important zone for it. We know it's been marked as support for quite some time, so no real surprise to see it pull back up there, but it's got problems everywhere in front of it. It's got the 20 moving average right in its face. It's got a very strong resistance level there at 150, so it's got a round number, psychological level, 20 moving average, only a handful of pips away, which certainly worries me a little bit. I wouldn't be that keen on taking that long, even though the pattern is so clean, until it breaks that level. If it does break that level, The pattern should indicate that it would hit the 152-ish again anyway. That's about the range of that candle. So realistically, if we get a close above the 150.20, then I'd be looking to aim for that 151.80 to 152 area as a take profit. But if it rolls over at the 20 moving average, which it may well do, there is a lot of resistance at this point here. Look for a retest of that 148.50. So not bad trading, but probably keep those relatively short as well. We're in certainly scalping mode there as well. All right, over to the dollar index, and yeah, look, it held up as we expected last week. We were talking about it reaching the support zone at 103.40. It did that for us, and it's found a little bit of support there. You know, look, we've had a close of markets, of course. It is Thanksgiving in the US, so these markets are probably going to be a little bit flat over the next 24 to 48 hours as well, so you've got to be mindful of that. So it's not a real surprise to see a lot of consolidation in these zones. Support here where you needed to find support, but of course the euro is the one we're going to trade. Still in a downtrend though, series of lower highs and lower lows, as you can see on the daily. A 2050 absolutely crossed now. There's no debating that. So we are definitely in a downtrend, but the euro obviously is the one we would normally trade in this situation. It hit the 109.50 area, no problems there. Very strong resistance there, of course, so no surprise to see it stop there and pull back a little bit, and it's finding a little bit of a base at around that sort of 108.50. But again, very slow. We've got a 2050 cross on the way up, of course, which coincides with the dollar index. So no real shock there, but good trading nonetheless, right? We're looking at pretty good scalping opportunities because we're probably expecting it to be a little bit flat over the next little bit. I'd be looking at keeping the trades in between the 108.50 and probably the 109.50. Look for scalping opportunities. Go to the smaller time frame, like you can go to a 1 hour time frame and look for opportunities inside those zones. Series of higher highs and higher lows. Even a 15-minute will do the job, and you can aim for those bases until we get a breakout, either a daily close above this level or below this level, and then we can start looking at a bigger move. But until then, probably trade inside this zone, especially for the rest of the week until we get that breakout. And then over to the US 500, we'll pivot back down to up to a daily chart again. Again, you know, no real surprises here. It broke through the resistance above at 4,500, and it's just basically traded just above it. Look, it's sort of hovered about 1% either side, up and down over the last 3 days. Again, US holiday, Thanksgiving, it's going to be relatively flat. No real surprise here. Very, very seasonal. So probably really wait and see what happens next week on this one. I'd be looking for, even if we're getting a close above 45.50 by the end of the week, and that's where we're trading Monday morning, I'd be looking at probably opportunities up to the 4,600. But if it's looking a little bit weaker and below 4,500, then I'd be looking for a pullback back down to the 44.50. So really, it depends on where this lands on Monday. If we're trading above 45.50, I'd be looking at 50-point move up to the 46 to the next resistance point. But if it's trading underneath the 4,500, I'd be looking for a bit of a pullback down to the 20 moving average. It'll catch up by then, and the 44.50, which could be the next reload zone for it, and not a bad opportunity to take it long. But we'll see how that one goes. Again, just be mindful that it's going to be probably quiet. So just be be aware that you might be surprised that there might not be a lot of action. Yeah, stranger things have happened. You never know what can happen in the markets, but the likelihood is that during public holidays in the US, it is a bit quiet, so just be mindful of that. Hope everyone's had a great week's trading, consolidating week, scalping opportunities, no real big long opportunities, but hopefully you're able to get some pips out of it. Have a great weekend, and I look forward to seeing you all next week.